Hello and welcome to episode number 36 of 11FS Spotlight. My name is Simon Taylor, and today in this weekly show, we shine a spotlight on the brightest and best in the tech and financial services industry to understand what gets them going, what gets them growing, and of course, what does the future really look like? A big part of this show, of course, is your involvement. So please leave your questions in the comments sidebar, whichever side it's in, depending on where you are, and we'll be answering them for you today. On today's Spotlight, I am joined by some incredible guests. I'm joined by Alex Stanta, who's founder of Bank Like a Woman, and Jessica Wilkinson, the founder of the Hilda Project. So excited to have you guys joining us today. How are you doing today, Alex?
I'm great. How are you? It's great to meet you, Simon. Thanks for having us.
Real pleasure. I'm doing really well, thank you. I'm excited for the conversation. How about you, Jess?
Doing excellent, and also very grateful to have the opportunity to have this conversation.
Yeah, and let's just jump right in, shall we? Could you tell us a little bit, perhaps let's start out with the Hilda Project. Tell us, kind of what is it and how did it all get started?
Yeah, so my background for the last few years has been management consulting, and I ended up resigning in January with the expectation to take a few months off and figure out what was next. And I think I was retired for 6 days, and I read 3 books, and one of them was Invisible Women by Cristina Criado Perez around the gender data gap. And I had been working in financial services and sort of at the nexus of open banking, digital identity, and personal data, and also going to a lot of events about women in finance and recognizing that there is a gap across every element of the financial services spectrum for women. So there's an earning gap, a savings gap, an investment gap, a pension gap. Like it just keeps going. And there's a certain point where you have to take a step back and look at everything and be like, there's something fundamentally broken. So it started as a few conversations over wine with friends and being like, we can't all be systemically bad with money. That's not an option. And that's where we started to explore this concept of, what if women built a bank? And so the Hilda Project was named after Hilda Harding, who is the UK's first female bank manager, promoted by Barclays. And in 1954, 58, I really should fact check that. And it all started with, what does your life look like and what do you need from your money? And so we've interviewed, coming up on 100 women in 100 days was the goal, and trying to summarize all of that into a final report as to what if women built a bank?
I love that question, and I'd love to unpack what you found along the way. But Alex, it might be as well talking a little bit about Bank Like a Woman. So how do the projects relate, and what is Bank Like a Woman?
Yeah, so my background is in business. I'm a communicator by trade, which is actually where Jess and I met. We were colleagues at a public relations agency at the outset of our careers and have just stayed in touch by the miracle of social media. Or I'm not going to date us, but it's been many years. And I since moved into more of a strategic role and grew my career in mostly male-dominated industries, and specifically financial services and wealth management. So the common thread in the work that I have done is there was always a project around personal finance, and that was from building one of Canada's first robo-advisors to implementing sort of a market-leading payroll system at a global airline. And there seemed to be this common thread of helping people get and grow money. And so through osmosis, I just developed an interest in financial literacy. And that is sort of where this came from, is just, I was lucky enough to grow up with a financial education and with a mother who taught me why I should make my own damn money and why I should invest and why I should budget. And I always thought that was the norm. And the older I get, the more I realize that is actually a very rare occurrence. And so, this conversation happened, Jess and I were both kind of in this settling in period in our lives. I had just had a baby, and we're not really the types of people to sit still. And we connected and started talking, and it has sort of snowballed into this really interesting project that has had some great feedback, and we've met some really interesting people, and we've learned some very interesting things. So that's
I'm excited to. Sorry, Alex. I'm excited to dive into exactly what you've learned. But one thing that really stood out to me is you've sort of got to focus on the United Kingdom as well. And as I'm listening to those accents, I'm thinking, you're not from the United Kingdom necessarily, or there's certainly been a long time where the accent was formed that wasn't in the United Kingdom. What made you look at the UK?
So I'm based in the UK. I've lived here for a couple of years now, and and really, that's where my whole focus was. There was around open banking in the UK, and for a few years I was traveling back and forth between Canada and London, and really as open banking was becoming a thing here, and watching that roadmap and getting connected with some of the people that were designing that system, also getting involved with organizations like FData and trying to push for that change in Canada. So we looked at it, and my life is here in the UK, and Alex's is in Canada, and we see an opportunity a little bit to share experiences back and forth, but looking at this slightly separately because of where the regulations are in the two countries. And I think it's actually highlighted what an opportunity it is to actually have open banking here, and being able to push into open banking, open data, open life, whereas Canada is not quite there on the spectrum. So we split our focuses slightly geographically, because of where we are, and then slightly because we recognize that the regulatory environment is different. So that's where the approach is. The goal is the same. The intention and the spirit behind these are the same, but they have to be treated slightly differently because of the different regulatory and market environments.
Yeah, it's a fairly consistent theme as people look at the UK. It's that access to the data and the reality of open banking in the UK, and kind of sort of the infrastructure and the providers that are super interesting to practically start building with a lower cost, and the amount of convincing you have to do to the regulators to do anything innovative is possibly maybe a little bit less. So let's zoom back out. Alex, I want to come to you in this, and I think there's probably a big Hilda Project piece of it as well. When you've looked at this, as you've been on this journey, when you've asked the question, what would a bank look like if a woman-built bank look like? What have you found when you've done the research? What are the big things that have stood out? What surprised you? There was a whole bunch of gaps. Where did it really stand out?
We could talk about so many things, but the piece that has been really interesting to me is the biases that are just built into the banking system. And so, banking was created when women were actually not allowed to participate, and we weren't allowed to have a bank account without a male cosigner. And so it's not that the banking system was created to keep women out. It was created when we weren't allowed to participate. And so it was built by men, for men, and times have changed. We are now able to participate and willing to participate and able to grow our own wealth and own property. And so the biases have been built into every pocket of the banking system, be that in the way we measure and use credit scores, to risk profiles, to credit adjudication models. And so the interesting piece for me is to sort of dig into that whole value chain and pull out all of the biases and build against those. So how can we build a system that doesn't discriminate against women, and that that makes it easier for us to participate on an equal level?
It's interesting. A good friend of mine, Will Weiss, is the CEO over at Daylight. Don't know if you've seen Daylight Bank in the US, but of course in the LGBTQ community, you see similar things happening where even something as simple as using your true name on a credit or debit card flags you as a fraud risk. And trying to use that. And there are all of these biases that were probably not set up for nefarious purposes, as you say. They weren't designed to discriminate. They just happen to be discriminatory because they were built for somebody else, and they're not built to accommodate the inclusivity that we live in this world today. And I think that's a really powerful point for people to realize. And Jessica, talk to me about then how does this manifest? What is the impact of these biases?
Well, I think when we did, sorry, it's not COVID, it's bronchitis. When I've been doing the interviews, so how we've structured the interviews has been walking through asking women what the 3 defining moments in their life are, and then we talk around money, and that's uncovered quite a lot of things around the our mindset toward money. And I think overwhelmingly, what I've found has been that money represents for women freedom and security, and that's probably 2 sides of the same coin. But it's not. We're thinking of it as a way to preserve autonomy over our own choices, over our own lives, and that's the mindset that we're entering into whenever we're working about money. So it's still kind of a protection security, whereas I think a lot of men, and maybe it's generational inherited knowledge, I'm not sure, but look at money and wealth as something from which to build. And we're still in a position where a lot of women are, okay, how do I preserve control and autonomy and security for my life? So that's been really interesting. And I think another theme that has really come out in the conversations has been the relationship that women have described. And this has come out in a lot of the interviews unprompted, that women feel that the relationship that they have with their bank is similar to a head teacher student or a principal student sort of relationship, where you don't want to go to their office, and you certainly don't want to go with bad news. And we perceive anything that means we're not making money or making less money as bad news. And when you think about the trajectory of a woman's life, if you look at stepping back, the trajectory of the model for up until recently has been the model customer for banks has been someone who starts earning, has a relatively linear growth, unbroken earning career path, retires, buys 1 or 2 properties in there, and that's pretty much it. That's what the system is set up for. Anything other than that is a bit of an anomaly. Women have a lot more disruption and volatility in our earning patterns and our working patterns, just for a lot of managing caring responsibilities, whether it be children, relatives, other situations. So when we have all of these really volatile earning points in our lives, and we don't want to tell our bank because it's perceived as us giving the bank bad news. So there's a lot of shame. We've somehow disappointed this system that we should have done, but like Alex said, it was built before we could participate. So there is a lot of shame and uncertainty and a lack of confidence. And I think as we look through the so what and what can we build, we really have to tackle that head on. The financial products necessarily may not be particularly bespoke or specialized, although I have found that there's probably areas in which we can explore specialized financial products for women. A lot of it is how does that entire experience look? And if you build the entire customer journey, and we have the ability and the technology to do this now around a volatile earning pattern, we know going in that you're going to have volatility in your earning. That looks a lot different from a customer experience model and an operating model.
And from credit underwriting model, and the classic of credit underwriting is, can you afford this credit, and are you credit worthy? And those are 2 very different questions. And if you can't afford credit right now because your earnings has gone down, it still doesn't mean you're not credit worthy. Yes. You may have had a history of repaying your loans on time, of always paying your bills, of prudently saving. The fact that your income has dipped might be completely separate to the fact that you always pay your bills on time. And with open banking data now, there are good ways to start to prove that out in really powerful and interesting ways.
Oh, exactly. And I think, so I think using data in a way that's more clever and more empathetic toward the needs of the customer. And there's a lot of that going on. I mean, a lot of the fintechs are looking at solving that exact problem. And we're in a really interesting period where, we can build a bank from scratch. And you've seen it with Monzo, with Starling, with a lot of the others. But, and this is another thing that we're testing as part of the research, is what does that banking model look like? And right now, you don't need to be a bank. You don't need to offer a vertically integrated stack of financial products. You end up looking a lot like a concierge service, that your job is to know your customer. And so your job is to understand what's going on in a woman's life, where their plans are. Are they planning to have children? Are they trying to navigate, career breaks? And then reaching back into a really increasingly diverse ecosystem to match them with the products. So even if you look about how would women build a bank, a lot of it challenges the very kind of norms of what our traditional banking models look like. So it's a really interesting intersection when we start to pull those threads.
Yeah, and maybe Alex, pull on that thread a little bit more. Sort of, what does it start to look like? I like this idea that you're almost more like a concierge or a broker. What does that start to look like tangibly?
Yeah, and to be fair, I think it looks different in Canada than it does in the UK. So the way Jess and I have approached it is we're essentially building in reverse together. And so in Canada, 90% of Canadians bank with one of the big 6 banks. We don't yet have any sort of open banking model. And so we're sort of scrapping together the data collection piece, where in the UK, you have open banking and you can build something that is a bit more secure and you can share data back and forth. And so that concierge in the UK looks a little bit different than it does in Canada. And so what we're trying to build here is I'm currently working on all of those different moments that matter. So how do we identify the most impactful times in a woman's life where we can change the way change the way they experience their money in those different moments. And so Jess is working on building an actual concierge tool, whereas we are building out those journeys and what that looks like here. And we potentially will start out as a service for maybe the big banks, or maybe we'll build something. We're still sort of in that test and learn process.
The Canadian market's super interesting. I have a funny feeling next year is going to be an interesting year for the Canadian market. I know a lot of the banking as a service providers in the US are looking at market entry to Canada, and that could be a real game changer, as are some of the other banking providers.
I think you're right, Simon.
Alex, you said something earlier that I want to touch on, which is this sort of notion of security versus opportunity. I think if I can broadly put it that way, of like building wealth versus security. You mentioned there identifying those life moments. What might an experience start to look like in one of those life moments, and how does that sort of intersect with the research you found?
Yeah, so I'm going to use myself as an example. So I have had a fairly linear career path up until 3 years ago. Like Jess was suggesting, I went to school, I started my career, I've had a number of different jobs, I was very career focused, I have very steadily made and gradually increasing income, let's say. And then I had my first child, so I took a mat leave from my job. I stopped making money. And what that looked like for me was that I would either have to use my entire maternity leave income to supplement my pension savings or my retirement savings, because my employer had a program where you have to, you have to contribute your savings and then they would match it. So in order for me to receive that match, I had to basically use my entire income for my retirement savings. So my choice was to continue saving for retirement or completely stop altogether and miss out on that 12 to 18 months of savings. Then when I was due to go back to work, COVID happened. So another, income interruption, and I was consulting, which I have done for quite a long time. And then I had my second child. So that's a third career interruption in now what is 3 years. And while I had built a life where I could continue to earn an income, traditionally, that would be 3 years where I'm not making any money outside of government programs. And so not only has it impacted my personal income and my household income, but my retirement savings, as well as different products that I might have applied for. So my husband and I renewed our mortgage, as an example. And what we were trying to do was refinance, but I had to actually take my name off of the mortgage because my lack of income was affecting our ability to be approved.
And one would expect that your earnings potential, your history of income should be at least a little bit of a factor there, especially as it sounds, consulting, successful career. That's really something that the data's all there. Like it all exists. Why not just look at it?
Exactly. And you would expect that it would be, I expected for it to be easy. And I worked in financial services and I was just like, this will be no problem. It was a problem. And the additional inconvenience is you have to open your entire life to the bank. You have to provide paperwork. You have to give over all of this information. Whereas my suspicion is in the UK, they would have easier access to that, where I'm not sending 15 to 20 emails to my bank to be approved for a mortgage.
Well, I can tell you that having done a mortgage in the UK in the past 6 months, they're still pretty painful. Not all of the providers are working with open banking just yet. But what I would say is there's companies like Credit Kudos who've built underwriting engines that automatically connect to your bank account. So in theory, there's a lot of the pieces of the puzzle built for somebody to be able to do that. We also have digital brokers like Habito who will work with you directly and will look at other data and kind of bang on the door of the lender on your behalf. So I think it is improving for sure. Just taking, sorry, go ahead, Alex, sorry.
No, I was just going to summarize and say, to answer your question, one of those moments that matter that we have identified is deciding to have a child, and how do you prepare for that? And not only does it change your entire personal life, but it changes, money can have a major impact on that decision and how happy you are in the end, really.
Absolutely. Jess, I was just going to ask you, there's been a real I think, movement in the past couple of years by major brands, major banks to show that they are more inclusive, to show that they are responsive to the changing needs of kind of society. But how much of that is sort of painting it pink and pink washing? How much of it is real? And is it really being felt? Is change coming?
I mean, I hope so. Somebody was asking me when I was explaining the Hilda Project, they're like, well, what if your idea is great, but what if Barclays decides to do this? And I was like, great, that would be amazing. But I think it's difficult when you're dealing with, and getting into the nuts and bolts of how banks have matured and built out over time and the operating model they have and a lot of the legacy data and infrastructure they have. I mean, every bank, we know is struggling with what do you do about the core? And we're in this really, and even if they want to do something differently, there's a whole legacy of bias in the system. There's a legacy of messy data, systems don't talk to each other. Like, it's not that they're, specifically trying to be uninclusive. It's really difficult, and the tools that they have at their disposal. Even once you get into making changes on a large scale, or when you have a portfolio at the scale of a Barclays or an HSBC to their credit risk process, it's substantial. So I think people and banks are opening up to different things. I've seen HSBC launch a bank account for the homeless population, and not having to have an address, and little things like that make such a difference. So, and there's a lot of different, there's a Bloom Money I saw this week, which is focusing on banking built by migrants for migrants. So there's a whole push for this hyper personalization of finance, and the Daylight First Boulevard in the US. Like, we have the technology. Most cases, we've got the regulatory environment, and we have the ability to create these experiences. So, excuse me. So I'm hoping we will start to see really tailored experiences for people soon.
Absolutely. The personalization is so key. I think this rise of the digital community bank that is inclusive is just a wonderful thing to observe. And part of what the new infrastructure and the fintech providers have really got the whole industry thinking about, whether it's the big banks or somebody else or somebody new that's doing it, at least somebody is doing it. And that has to be a good thing. We're coming up on time. So I'm going to ask us, just before we finish off, what's next for Bank Like a Woman, and what's next for the Hilda Project?
Alex, you can go first.
Yeah, so for Bank Like a Woman, we've got a survey in market right now. And so what we're really trying to do is build the infrastructure and data sets to gather gender desegregated data so that we can really compare and contrast the sort of real time, in some cases, save spend data between men and women. So we have all of these statistics we can throw out and say, 85% of women are involved in household decision making when it comes to day to day, but the men are doing the more higher level decision making when it comes to investing in real estate purchases. So we want to be able to show what is actually happening over time. And the survey currently is working on those journeys and the real experiences of women and banking. So we're doing sort of two streams of work right now in Canada.
Fantastic. And very quickly, Jess, because we're up on time,
yes,
how about the Hilda Project?
I'm furiously writing and rewriting the report and finishing up some interviews. So that's coming out. We did an initial concept. We did the FCA tech sprint on women's empowerment, and actually won one of the awards. So building out on a concept of how we can use data to predict vulnerabilities in women, which is a whole other thing we haven't gotten into. And I think the next steps, once the report is out, is setting up kind of micro working groups to dig into some of the very specific things, like around things like fertility insurance. Is something that came up, and can it be done? How could it be done? Things like, specific financial products around how to keep retirement savings whole, doing some really deep dive research into what's possible. So yeah, and then working toward a proof of concept for an initial offering is the next goal. Exciting.
And if people want to find out more about both projects, where do they go?
Hilda Project is just hildaproject.org. And if you want any information, there's a contact button. Just pop something in the form, and we'll be happy to connect with you.
And banklikeawoman.ca is our website, and we're each on LinkedIn as well, so you can connect with us there.
Well, I hope you all check that out. And it's for me, you can find me at SY Taylor on Twitter. Make sure you follow 11FS on LinkedIn so that you never miss an episode of Spotlight. And go visit the 11FS YouTube channel, where you can catch up on all the previous episodes. And indeed, that's where you'll probably find this episode if you missed it live as well. Have a great week, everybody. Bye for now.
Thanks, Simon.
Thank you.